Hello everyone, this is the second lecture of marginal costing. Here we're talking about the different formulas of marginal costing. Student, in the earlier lecture, here we're talking about the definition of marginal costing. Second is the meaning and definition of marginal costing. Next one is we already discussed the example of marginal costing. We already discussed about the feature of marginal costing, and we already discussed about the advantages of marginal costing. Okay, now for this today's session, you will be talking about the various formulas, which is very important to know about that the marginal cost. So in this session, we are talking about the different formulas, which is very essential to know about that the marginal costing, as well as it is practically used to calculate the various cost of the marginal part. Now, out of this one formula, the first thing here we're talking about the profit. It is very simple formula to calculate the profit in a marginal costing. That is sales minus variable cost is equal to contribution minus fixed cost is equal to profit. So profit is also known as net margin. So net margin is calculated after the deducting of a fixed cost. So there are the different formulas to calculate the profit. So that is very simple formula to calculate the profit. So profit is equal to contribution minus fixed cost. So every company, when you want to find out the profit through the marginal costing, they can easily use these two things. The first one is a contribution and the second one is a fixed cost. So when you want to find out the fixed cost, then you can simply subtract out of the contribution minus fixed cost, then you will be get the figure of a profit. Now we're talking about the second concept, that is a contribution. Now what is the contribution? So contribution means nothing. It is the gap between sales and variable cost. So whatever the difference between the sales and variable cost, it is known as a contribution. Say example, suppose my selling price is 10 rupees and my variable cost is suppose that 5 rupees. So 10 minus 5, so whatever the pending amount, that is the 5, it will be the contribution. So there are the different formulas to calculate the contribution. So contribution is equal to sales minus variable cost. Contribution is equal to fixed cost plus profit. Contribution is equal to fixed cost minus loss. So these are the different formulas to calculate the contribution. So contribution means nothing. It is the gap. It is the difference between sales and variable cost. Now we're talking about the profit. That is a profit volume ratio. So it is also known as a PV ratio. This is a properly known as a PV ratio. It is expressed the relationship between the contribution and sales. It is expressed in the percentage. So PV ratio is indicating the success and sound business structure of the organization. Those companies PV ratio is high, so the particular organization is a successful organization, and those companies PV ratio is low, so we can to consider that organization is not up to mark. So PV ratio means nothing. It is a sound indication of the business. It's a success of the business. So this success is described or defined by the PV ratio. So there are the two important formulas of the PV ratio. Suppose that in this calculation, if has to be given the sales and variable cost, then that time you can to use the sales and variable cost figure and you can to easily calculate the PV ratio part. So the first formula for the calculation of PV ratio is a sales minus variable cost upon sales into 100. So that is a formula. Yeah, you can use the C upon S into 100. So with the help of a C upon S into 100, you can to calculate the easily profit percentage of the organization of a single year. Yeah, there is one more formula. Suppose that in the organization has to be given the 2 years profit and 2 years sales, then that time you can use the second formula of a PV ratio, that is change in profit upon change in sales into 100. So you can to use this formula, and with the help of this formula you can to finally calculated the percentage of a profit. So there are the two formulas. One is a C upon S into 100. When we use this formula, when has given single year profit and single year contribution, yeah, single year sales and single year variable cost of the organization, then that time you can to use this one. And suppose if has to be provide the 2 years profit and 2 years sales of the company, then that time you can to use the second formula. So PV ratio is very important because of this ratio define the success of the organization. Now we're talking about the BEP. So BEP means nothing, that is a break even point. So what is the break even point? So break even point means nothing. It's very simple definition of BEP. BEP is a point at which there is no profit or no loss of the organization. When your total cost of production is equal to your total selling price, then that time has to be the part of a BEP. So break even point means nothing but a point, then that time you have not any kind of the profit, and even that you have not any kind of the loss also. It means that when your cost of production is equal to your selling price, that is known as a BEP. And it is very essential for the buddies organization, new organization, to know about that their BEP level. So break even point expressed in a two-way, BEP in sales and BEP in units. So in every organization, they are, when they want to manufacture the product, and even that when they want to sell their product in the market, then that time they always focus on they should be clear at least BEP level. Once they clear the BEP level, then that time they think about their discount policies and buy one get one policies for a selling of the product. But first upon, they always targeted they should be clear their BEP level. So every manufacturing organization has to be very important part of the BEP, and BEP in sales and BEP in rupees. So how we calculate the BEP? So there are the two important formulas. The first one, fixed cost upon contribution per unit. This formula you can to use to calculate the BEP in units. How many unit? Suppose if I sell in the market, and then the particular unit will be get the idea, yes, this unit is your BEP unit. So when you want to find out the how many unit I should be sell in the market to clear the BEP level, then that time you can follow this formula. Yeah, you can use this formula, that is a fixed cost upon contribution per unit. Second, when you want to find out the BEP level in terms of the rupees, yeah, in terms of the sales, then that time you can use the second formula, that is very simple formula, fixed cost upon PV ratio. Now it is a graphical presentation of BEP. So in this presentation you can to see here there are the two important line, one is a sales line and the second one is a cost line. Student, when sales line and cost line will be cross, that point is known as a BEP level. You can to see this graph, there is a sales line and total cost line has cross, and this cross point is known as a BEP level. Even that there has to be provide the fixed cost line also, even that there has to be provide the MOS line also. This BEP analysis chart has to be defined about the BEP strategies in a simple manner. You can understand here, when your total sales line and total cost line cross at that point, that is known as a BEP point. So break even point means nothing, is a point at which there is no profit or no loss of the organization. But it is very important to every manufacturing organization, when they want to sell their new product in the market, then they should be understand their BEP level in terms of the sales and BEP level in terms of the unit. So both things they should be understand, and then after that they will be get the correct idea about the sales promotion, even that sales promotion, even that the idea of a different kind of the strategies for following the sales promotion also. So this is a graphical presentation of BEP. Now we're talking about the margin of safety, that is called as a MOS. It is the excess of the present sales value over the break even sales. Margin of safety indicate the strength of the business. High margin of safety indicate that the profit will be earned even there is a fall in the selling price. On the other hand, if the margin of safety is small, a decline in the sales value, it will be matter of great concern to the management. Dear student, margin of safety means nothing, but it is a safe zone of organization to getting the smooth profit. So this margin of safety also expressed in a two-way, margin of safety in units and margin of safety in rupees. Yeah, you can say margin of safety in sales. So what is the formula of margin of safety in units? So that's very simple formula, actual sales minus BEP sales. When you will be subtract actual sales subtract my BEP sales, then whatever the sales amount is pending, that is called as a margin of safety in units. There is one more formula to calculate the margin of safety in units, that is a profit upon contribution per unit. Even that there is one more formula, profit upon contribution per unit into the selling price per unit. And there is one more formula, it's a profit upon PV ratio. So these are the different kind of the formulas to calculate the margin of safety in units. Now there is one more part, margin of safety in sales. Student, The formula of the margin of safety in a sales, that is very simple, is a profit upon PV ratio. It's a formula of a margin of safety. So I repeat again, margin of safety is calculated in the two way, a MOS in units and MOS in sales. So how we calculate the MOS in unit? With the help of actual sales minus PAP sales. And how calculate the MOS in sales? Yeah, MOS in rupees, that simple formula, profit upon PV ratio. So these are the two important things. Student, with the help of this one, you can to make the analysis of your business. Here we're talking about these some formulas. The first formula is the profit formula. The second formula is the contribution formula. The next formula is a PV ratio formula, that is very important. The next one is the BEP, break even point in sales and break even point in units. Next, this is a graphical presentation of break even point. And last part is a margin of safety in rupees and margin of safety in units. So in this lecture here we understand the different formulas which will be very important to the organization, to the calculating, controlling and reducing the cost. So through this lecture we understand here these all calculation. I hope you understand these all things which will be very important for the manufacturing organization for a cost analysis, even for cost reducing and cost controlling. Thank you so much.